Hey everyone, welcome back to Corporate Decoder. Ever wonder what happens when a company takes out an $80 million loan? Well, today we're diving into the details of Greystone Housing Impact Investors' latest financial moves. And let me tell you, it's more than just a simple borrow and spend story. We're going to decode where that money's going and what it means for the future. In this video, we're breaking down Greystone Housing Impact Investors' recent filing with the Securities and Exchange Commission. They've just secured a big credit agreement, which is essentially a large loan, and we're going to dissect what that loan is for, what the terms are, and what it means for the company's future. Before we dive in, if you find value in breaking down complex financial documents, hit that subscribe button and join our Discord community. The link is in the description below. Let's begin with the basics. The report is dated June 30, 2025, meaning the information inside is as of around that time. It's also an amendment, meaning they're correcting something they previously filed. In this case, the company is making a correction to a previous report. They messed up the expiration date of a credit agreement, which is a type of loan deal. They are saying not to worry. This is only a small change in previously filed reports, and nothing is different other than this, so that the investors don't have to worry about bigger underlying issues. Now let's get to the main event. Greystone Housing Impact Investors entered into a new credit agreement worth up to $80 million. Think of this as a giant credit card with a limit of $80 million. This replaces their old credit agreement from August 2021. This $80 million line of credit or loan is earmarked for some specific things. They're going to use it to buy what they call financed assets. In plain English, this means they want to invest in things like tax-free or taxable loans used to build or improve houses, or in loans guaranteed by strong investment-grade tenants. They have rules for how much they can borrow for each project. They can't borrow more than the cost of the asset, or more than 80% of its fair market value, or more than $30 million, whichever is the smallest amount among all those items. This helps keep them from borrowing too much for any one deal. Of course, this loan comes with interest. The interest rate is based on something called adjusted term SOFR plus 250%, and it changes every month. SOFR is basically a benchmark interest rate that banks use. If they fail to make payments or violate the agreement, the interest rate jumps up by 3%. They also have to pay a fee on the amount of the credit line they don't use. The loan has to be repaid within 270 days of when the money is borrowed, but they can extend it a few times up to the final maturity date. However, have to pay a percentage of the amount borrowed to make that extension. Also, if they acquire loans secured by master lease agreements, they only have 45 days to pay back the loan, and there is no extension available. The final deadline to pay back everything is June 30, 2027. They can extend this date by up to a year. Twice, but they have to pay a fee to do so. This extension is only available if certain conditions are met. To make sure the loan is secure, they're putting the assets they buy with the loan money into a special account. This account acts as collateral, meaning if they can't repay the loan, the bank can take those assets. The credit agreement also requires them to follow a bunch of rules. For example, they have to provide regular financial reports. They must also confirm the financial reports are valid, compute the leverage ratio, and ensure no event of default exists. They also have to keep their books and records in line with standard accounting practices, maintain insurance, and pay their taxes. There are also restrictions called negative covenants on what the company can do, such as taking on more debt, selling assets, or changing the type of business they are in. The credit agreement also gives a variety of customary events of defaults and implications if these defaults occur. The company also issued a press release to announce this new credit agreement. You can actually find this press release in their fillings and see a copy of it. Since they entered a new agreement, the old credit agreement was terminated. This part simply states the old deal is done. This section says that the information mentioned above is included here as well. Again, just confirming the validity of the information contained in the report. Lastly, it has a section containing forward-looking statements. It's basically a disclaimer saying that they can't guarantee future results. There are many things that could happen and impact results and cause projections to be inaccurate, such as short-term interest rates fluctuating, changing collateral valuations, and overall economic and credit market conditions, among others. To review all this information and see what it might mean, Greystone is getting a hefty $80 million credit line to invest in affordable housing and related projects. This move is likely aimed at expanding their portfolio and taking advantage of opportunities in the housing market. The interest rate tied to SOFR is something to watch. If interest rates rise, it'll cost them more to borrow. The various covenants or rules in the agreement are pretty standard, but failing to meet them could trigger defaults. One potential risk is the heavy reliance of taxable loans, which depend on external factors. Another red flag would be failure to pay credit or debt payments. If those items change, it could negatively impact the company. Overall, this credit agreement seems like a strategic move for Greystone. But like any financial deal, it comes with risks. The key will be how wisely they invest the money and how well they manage their debt. Alright, that's our breakdown. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.